Hello and welcome to the Road to Retiring YouTube channel. Today I am looking at Taiwan Semiconductor Manufacturing. The first thing I like to look at for a stock is its moat. A company's moat refers to its ability to maintain the competitive advantages. I consider a company to have a wide moat if they have an average compound annual growth rate of over 10% over the past 7 years in the following metrics. 1. Equity growth. 2. Earnings per share growth. 3. Operational cash flow growth. 4. Revenue growth. For TSM, for equity growth this is 11%, for EPS growth, 17%, for operational cash flow growth, 15% and for revenue growth, 14%. This is an average compound annual growth rate of 14% across the 4 metrics, nicely above the 10% benchmark I look for. I also like to see that the management are investing funds efficiently before I decide to purchase a stock, and I consider a return on invested capital of over 10% to be a good signal for this. TSM's ROIC is currently 30% and has been consistently well above the 10% benchmark over recent years. Additionally to this, I want to see that any long-term debt the management is taking on can be paid off. To measure this, I want a company's free cash flow to be able to pay off long-term debt within 3 years. TSM has $27.15 billion in long-term debt and $18 billion in free cash flow over the trailing 12 months. So I am confident TSM will not be in imminent financial trouble because of this. Based on this, TSM performs well on all metrics, so we will keep the margin of safety at a low 10% as this performance signifies lower risk. So now we have to consider what price I would buy TSM under. To do this, I estimate the value in 2028 and then apply a discount rate 9.5%. This then tells me what price I should buy under in 2023 in order to receive a 9.5% compound annual growth rate on my investment. As TSM currently has a dividend yield of 1.91%, I will reduce this discount rate to 7.59%. I estimate this value in 2028 in 3 different ways, using the price over earnings multiple, the price over sales multiple and the price over operating cash flow multiple. The average of these 3 predictions brings a 2028 value of $141, so the average buy value when looking for a 9.5% compound annual growth rate and applying a 10% margin of safety is $88.26, so I would buy TSM stock if it fell under this price. This 2028 value of $141 was calculated based on the following estimates: an earnings growth rate of 7.5%, share dilution of 0%, revenue growth rate of 12% and an operating cash flow growth rate of 9%. With the following multiples: P/E of 15, P/S of 5 and AP/OCF of 12. Comment below to suggest any other stocks you want to know my buy value and 2028 price prediction for, and let me know if you want me to use any different values for the assumptions I made regarding TSM, and I can tell you how this will impact the buy value.